Welcome back to Trade SKR. Today we're stepping into one of the most misunderstood areas of global trade: oil and energy products. Crude oil, jet fuel, D2 diesel, LNG. These deals are massive, high stakes, and yet filled with traps. If you're a buyer or intermediary, the big question is simple: how do you confirm supply and protect your buyer? That's exactly what we'll cover in this session. First, let's zoom out. Oil is still the world's most traded commodity. Every day, more than 100 million barrels of crude are moved across the globe. Jet fuel and LNG are equally critical, feeding airlines and power plants. But behind those numbers lies a brutal reality: 80% of proposed deals never close. Why? Because buyers don't have clarity on supply and sellers don't trust the counterparty's execution. Let's start with the myths. The first myth: if the seller shows me a refinery certificate or a POP document, the deal is real. Wrong. Most of those documents can be copied, recycled, or outright fabricated. What matters is not the PDF sitting in your inbox, but the verifiable chain of custody and inspection records that prove actual supply. Myth 2. If I just sign the SPA and send it to the refinery, the barrels will start moving. Reality check. Signing a sales and purchase agreement without verified allocation is meaningless. Many brokers fall into this trap, wasting months chasing phantom allocations. Now let's go into what works. Step 1 is identifying the true mandate. In oil trading, there's always a jungle of intermediaries. You need to get as close as possible to either the refinery allocation holder or the upstream seller with proven track record. How do you verify this? One way is cross-checking their company against international trade flows, shipping databases, and past inspection reports. Step 2 is protecting your buyer. A genuine buyer is taking financial risk. The key tool here is escrow and structured SKR deals. Instead of throwing down full payment or a massive letter of credit with no proof of barrels, you structure an escrow backed by custodial banks. That way, funds are only released when inspection and loading are confirmed. It shifts the risk balance. Step 3 is inspection. In oil, nothing is real until SGS or a recognized inspector confirms it. For jet fuel, D2, or LNG, you want independent testing at the loading port. A real seller never blocks inspection. In fact, they encourage it because it builds trust. If your counterpart refuses third-party inspection, it's your first red flag. Let me illustrate with a quick case study. A European buyer was chasing jet fuel supply into Rotterdam. They had brokers sending them endless FCOs and POPs. But instead of moving on promises, they structured a small trial deal with escrow tied to SGS inspection. Result? Within 2 weeks, they confirmed a real allocation, moved product, and secured a long-term contract. The difference was structure and verification, not chasing cheap offers. Now, let's break down red flags you need to watch for. Sellers who refuse to share company registration details. Refusal of site visits or third-party inspection. Requests for massive upfront fees with no inspection rights. Brokers pushing you to sign NCNDs and IMFs before showing a shred of real documentation. If you see these, step back. 90% of the time, they lead nowhere. So what is the buyer's protection roadmap in 2025? First, validate supply through verifiable inspection history. Second, secure funds in escrow tied to SKR or bank custodianship. Third, structure trial shipments before scaling. Fourth, integrate compliance early. KYC, AML, and refinery due diligence must be completed before you move to contracts. Now, you might ask, how do we actually confirm supply when most sellers are hiding behind intermediaries? Here's the truth. You rarely start with full transparency. Instead, you build it step by step. Secure a soft probe. Does the seller accept inspection? Do they have verifiable past shipments? Do they cooperate with escrow structures? Each yes moves them closer to credibility. Each no is a deal breaker. This is where experienced traders use strategic SKR deals. Instead of traditional payment models, SKRs allow assets, oil or fuel allocations, to be custodied and verified before funds are released. It's a professional way to bridge the trust gap. Most newcomers don't even know these structures exist, but insiders rely on them to filter serious supply. To wrap up, here's the simple reality. Oil and energy products will always attract noise, false offers, and endless brokers. But serious deals do close, and they close when you confirm supply through inspection, protect the buyer through escrow, and use structured SKR frameworks to remove doubt. That's how real players move barrels, protect capital, and build long-term trade flows. And remember, what I've shared today is only the surface. The actual deal templates, escrow mechanics, and SKR structures we use inside live oil and energy deals are too detailed to cover here. For that, we've prepared a full insider breakdown, available exclusively in our gated video on tradeskr.com. So if you're serious about trading oil, jet fuel, D2, or LNG, and you want to see the exact mechanics used by insiders, click the link and watch the gated video now. Join us on tradeskr.com, where we break down the real playbook of commodities trading. See you inside.